Hi guys, this is Sector. Today is Monday, the 15th of October 2007. It's 11 minutes past 5 p.m. London time. The London markets are about to close, which is around the time I like to finish my trading shift. And I thought perhaps I could recap a little bit on the setups that I've been following today. I was telling the guys on my mailing list this morning that I was following a handful of setups. First of all, the GBP against the Australian dollar. I was telling the guys how in this nice downtrend I was looking to trade the breakout of this triple bottom, okay, right there at 224.50. okay, this is the triple top that I'm talking about. However, price has indeed found support throughout today's session, and it's shot about 234 pips exactly to the upside. Okay, right now we are moving on to resistance levels once again. Well, basically retesting the dynamic area of resistance, also retesting this former level of well, consolidation. Let's say we had a channel down here, it broke to the downside, and now it seems like it's going to retest back the former channel bottom. Okay, this channel bottom I'm talking about, or actually it's some sort of a leaning channel or a flag formation, however you want to call it. It's been retested from below, but nonetheless this is a 4 hours time frame, and therefore I reckon this this setup is going to take a little bit to unfold. Okay, it's a little bit late right now for me to search for entries. Nonetheless, like I say, I will keep an eye on this setup for tomorrow. Right, next setup that I've been following today was the GBP against the New Zealand dollar. Same thing, it seems like we've been seeing some strength on the sterling pound across the board today, because most of the sterling pound crosses are showing a very healthy, very nice swing to the upside. In this case, 491 pips. Wow, nice move. I was basically waiting for this level, okay, the 265.50 round number level, which is also, it was also the 50% Fibonacci retracement there, dynamic area of resistance, previous swing low, etc, etc. So basically I was waiting for like I say, for this level to hold the retracement. It certainly hasn't. Okay, it's breached 150 pips above that level, beyond that level. So I'm not feeling too comfortable now to short from current market price. This would have been, like I said, the optimal level to search for a reversal formation for the downside. It hasn't happened, so well, I'm gonna have to let it go for the time being. All right. Next up, euro against the Canadian dollar. Also a setup on the 4 hours time frame. You know, guys, that the 4 hours time frame is my favorite time frame, and therefore is the first time frame I scan through. I like to well, you know, basically every morning search for setups at that time frame. I was telling the guys on my mailing list that last week we've been seeing a very nicely defined sideways consolidation area. Last Friday we broke below the former channel bottom. Okay, I'm making a mess on my chart right now. Okay, this is the channel bottom. Last Friday we broke below, okay, that channel bottom, and today I was well, basically waiting for a retest of that former channel bottom from below, and from there search for reversal formations to the downside for a whole new swing. Now, just as we had a consolidation area here which broke down to the downside, I was basically waiting for the same thing. Okay, consolidation, the MAs catch up with price, and therefore we see a new swing to the downside. That hasn't happened. Okay, the former channel bottom didn't quite hold the retracement, and therefore prices is moved again within the previous consolidation area, and for the time being I'll have to let you go. I'll keep an eye, since the moving averages are still pointing down. I will keep an eye on this thing tomorrow, but for the time being I'm gonna have to let it go. Similar thing actually on the euro against the whoops, 1 second, there it is, on the euro against the Australian dollar, also the 4 hours time frame. Basically a similar story. I was waiting for this triple bottom to give way to the downside, okay, below the 156.50, which is the level I was keeping an eye on throughout the entire session. That didn't happen, and price once again found support of this level, and it's now moved 150 pips to the upside, okay. Still the moving averages once again are certainly pointing down, and still from a technical point of view the downtrend is still in place, okay. Moreover, we still haven't taken the previous spikes up here, the previous highs at 158.00. So for the time being, like I say, this downtrend is still valid. Nonetheless, I will certainly not search for any short opportunity until this 156.50 level gives way. All right. Next up, USD against the Canadian dollar. When I sent the guys the mail this morning, price was somewhere around there. I was telling them that I was basically waiting for a retrace back to the dynamic area of resistance, which, as you guys know, is the area I like to sell from or buy from if I am in an uptrend. This is the perfect level, the optimal level to get a reversal formation to the downside, the 0.9800, because we have the 50% Fibonacci level right there. We have the previous swing, actually a previous double bottom, and also, like I say, the dynamic area of resistance. But price is still quite far away from that level. Okay, I will have to let it retrace a little bit farther up, and I will have another look tomorrow on the loonie, on the USD against the Canadian dollar on the 4 hours time frame. Finally, another setup that I've been following, the last setup that I've been following today was the Swissy. As you remember, guys, I took a trade last week on this setup, which on this currency pair, sorry, which ended up as a loss. I still believe, as seen on the daily chart and on the weekly chart, that this downtrend is still in place. Okay, if we zoom back out into the weekly chart, we still see that this triple bottom level, the 190 level, is still holding price below. As long as this 119.00 level is not breached to the upside, the downtrend is still valid. Okay. It's just a matter of finding the right time for entering this trade. On the 4 hour time frame, we are seeing a massive 1, 2, 3 formation. All right, my sound alarm is at 117.66 for, well, for a possible short entry. But well, it's taking just too long. Like I said, this is a long-term trade, and it's gonna take it takes obviously longer time to unfold. Nonetheless, I still have some belief on this. I'm still definitely bearish on the Swiss franc. As soon as I find, as I see that this well, 1, 2, 3 formation is confirmed, I will have to search for short entries. For the time being, like I said, this is a long-term setup. It takes time to unfold, and well, you gotta I gotta be patient. For the time being, we've gotten a breakout of the former of the last or outer retracement trendline, this being the inner retracement trendline, which actually was the trendline breakout that got me in the trade last week. Okay, I entered around there and my stop loss got triggered up there. Now we have an outer trendline, which is the one I'm marking in red right now. It has been broken, like I say, but now we need the confirmation with a continuation move to the downside. Okay, that's basically it. Those are the setups that I was following today. None of them has triggered. None of my trade plans for the time being have carried out. Okay, they are still on hold. The Swiss franc trade, the Swissy setup is still valid. And I will continue looking for a possible short entry. All right. Nonetheless, I will keep you updated. Okay, that's all for today. Bye bye.